What's up, guys? My name is Micah. I used to do videos here on YouTube probably about 5 years ago, different financial videos, investing videos. And I kind of wish I would have continued to do those as my knowledge progressed over time and as my skills progressed over time. But I either lost interest or I ran out of time or I was discouraged and I quit doing them. But now I work for a company that buys and sells hard assets, gold, silver, gemstones, a little bit with watches, collectible coins, paper money, basically any hard asset investment that one would want to buy. And one thing that I think is lacking is um, a dealer that can provide good content and good guidance to their clientele. And you have a lot of people out there like Mike Maloney and some others, and they don't provide bad content at all. I think it's a little bit different, and at the end of the day, they decide to you know publish whatever supports their business. So no matter what they show you, it's going to be in support of you going out and buying gold, for an example. And I want these videos to be transparent. I'll tell you when I'm buying, when I'm selling. I'll tell you when I think it's a good time to buy, when I think it's a bad time to buy for myself. And even though this is educational purposes, you can kind of see what I'm doing, someone that's in the business, and can kind of use that to factor in for your own decisions. Um, so I just wanted to provide something like that for my clientele, because some of them do ask, Micah, what are you doing? What do you think is going to happen with the price? And you know, I kind of refrained from telling them a lot of times, because I don't want them to make decisions based on what I'm doing. but at the end of the day, I should be providing more insight on what I think, and just kind of letting them know, like, hey, you can make your own decisions. This is what I'm doing. I hope you don't go and take out a second mortgage, because of what I'm doing. So anyway, without further ado, wanted to touch on gold and silver. Real short video today. I'm going to keep it under 20 minutes if I can. And I just want to talk about gold right now. We can talk about the long-term stuff. All of you know gold's in a long-term uptrend. It always will be as long as there's fiat currency that is not backed by anything. But I kind of want to talk to you about how I zoom out and determine, long-term highs, long-term lows. It's not perfect, but going into this thing with a little bit of a plan and an idea helps a lot. There's a lot of people out there that have something to sell you, and I've heard crazy numbers about gold: $100,000, $50,000 an ounce. And anything's possible in a fiat regime. If they just keep printing money, the sky's the limit for gold. It could be at any price. It doesn't really make a difference what the price is, because gold at the end of the day is just a barometer on the current monetary system. And so gold going up is a sign that the dollar is devaluing. Gold priced in yen, Japanese yen, is a sign that the Japanese yen is devaluing, and so on and so forth. And so I don't really see gold as an investment by any means. It's more of a currency. And so if we want to find where we think gold will head, over the coming years, I like to use Fibonacci's. These are the gold numbers, or the numbers found in nature, and they're definitely useful when it comes to determining highs, lows. Now, if you look back here in the 70s all the way to 2000, you see that gold found its low here right at the 786. and it consistently rejected the 618 here in this area, rejected it, headed lower. So anyways, these don't tell you where or when something is going to top necessarily, but it gives you a clue of you know, where they could find bottoms close by or tops close by. It's not perfect, like I said, but you'll see I have the 618 in red. That's the gold number, as they say. And you're going to see that, gold kind of found a low here nearby. And if you want to look for the highs of gold, you look here at these numbers. Okay, now it can always exceed these numbers, these price points, but it might give you an idea of where it might take a rest or a breather. And so for this year, my price point is around 3,400 to finish the year, somewhere between 3,400 and 2,800. So somewhere in this range. It's a little bit of a big range, but I think it's going to head there and then probably cool off a little bit into 2025 and maybe a little bit of 2026. And if you pull another fib, if you're going here from that as a bottom or more conservatively right here, because that's more accurately the start of its leg, if you will. You see the 618 around 2,500, which is right where the 168 is. So that's kind of that's the structure I think it's going to take on and then head higher. I don't know how high. Nobody knows. That's kind of how I see it. And you'll notice the bottom here. Let me get my drawing tool. The bottom here is not much lower than where we're at now. We're at 2645. Here would be about 2500, 2475. And what you're going to find if you haven't been in this market before, you're just getting started, that when the price decreases rapidly, so this is about 25% pullback we're talking about, premiums are going to go up. And so what you're going to find is this pullback might be, spot price might be higher than where we are now. Plus, you're going to be paying higher premiums. And so I don't think this is the market that you want to trade with physical. You might be able to do some things if you're paper trading, if you're trading derivatives. But I don't know. I don't see gold really having a tough time. And even a 25% pullback, this would be, if gold does do this, this is the start of, our great financial crisis, our depression, whatever you want to call it. This pullback here is where, the stock market's rolling over, pretty much everything's rolling over. And so if the Dow Jones goes down 50%, 60%, and gold goes down 25, relatively, you're doing okay. And that's if you bought up here in this range, at the high. So that's why I think gold is a really safe play here. I would hold it if you have an opportunity to buy some at a good price. I would jump on that. And yeah, it's going to be a good hedge coming up here, and you're really going to see why. So anyway, in short, I think we're going to have a pullback at the end of this year, the beginning of next year, and we're probably still going to be around the same price we are today. I do think the highs could be as high as 3,300. If the high ends up being 2,800, let's say it tops out there, I do think that we would probably find support along these highs here. So it's possible we see 2,100 gold next year, depending on where we make our high. If we continue higher, watch it this year. If we see it continuing higher to 3,400, I don't think we're going to make it back down to 21. So this is kind of an important month. If things stall out here, we could see things go as low as 2,100 again. But again, premiums are going to be higher, so you might be paying the same price you are today. Okay, moving on to silver. Oops. There we are. So silver is a little bit different. I think because of industrial forces and other forces, that there's a possibility of it making a low before going to new highs. And I really do believe that we could be in a fractal, the same fractal as we were in from 2019, 2020. You have this long gestation, consolidation, whatever you want to call it. And so I really think that if things do stall out this year, that we could see silver definitely break below these levels here, potentially head towards 17, 18, and worst case scenario, hit 15. And I know a lot of you are going to kind of laugh at this, and there's no one out there who's going to say that this is possible. But if things do start rolling over and gold goes down 25%, it is definitely within the realm of possibility that silver goes down 45%, 40%. You had silver drop in 2020, it went down 38%. And I think gold went down maybe 19. So silver is going to do basically double what gold is going to do to the downside. Now, the thing is, you're going to have really high premiums. So if it does go down to 16, let's say, and I'm going to draw a trend line just to reiterate that, there is the possibility for things to return to this trend line. But if you have $16 silver, you're going to have, say, $5 premiums. You're going to be paying $21 an ounce, maybe 20 an ounce conservatively. So you're paying basically 20% over spot retail if this happens. So what would that look like in the short term? Well, this current move would have to be negated. Things would have to calm down from here. If this continues higher, I don't really necessarily think that's going to happen. You could have a cool off like this. But if things get really rejected here, and we see a resistance here, I'm going to just draw my fib so you can have an idea. There's a possibility, if things continue, that we come up and hit about $36, I believe that is. Yeah, about $36.50. So if that were to happen, a decline from here would be a lot less. But there's definitely still the possibility of price going at least down below 25. Now, if we have some resistance here, I think the route very possibly is something like this, where we base back out at the 618, and then that might be a little bit too drawn out. So we could have a dump down towards the end of the year, and then as the election finishes up, we have kind of a ramp up, and then a slightly higher high, which is bearish, and then just the decline along with everything else. Now, there's a lot of speculation right now around the election, and I think it's going to have an impact on metals a lot, because metals are a barometer for public faith in the government and the government currency, etc. I think there's going to be a move leading up to the election And then there's going to be an opposite move post the election for metals. So things are either going to top out here and fall as we approach the election, which is the 1st of November. Mark it on your calendars. And then once the election's over, there's going to be a lot of drama and then kind of a spike in the prices of metals. And even after that, I think there could be, a serious drawdown, which is kind of a big call. And this might not play out, but it's more of a what if scenario. But I do think that silver is under a lot more pressure than gold is. I think it's going to have a hard time getting up towards 36. And if you look here, I mean, if you do the fibs, 35.50, I mean, that's right at the 618. So there's a lot of resistance here. So I think that we're kind of topping out here potentially, and then some consolidation I think is possible. But anyone that tells you from here that silver is just going to go up in a straight line and that we're just going to go to 50, I mean, it's not happening. I just don't see it happening. You had a lot of those moments like back in 2020 when it was just like boom. I mean, it shot up, and then we had some consolidation, and then from here in February of 21, it just looked like it was just going to continue up to 50. But it got held underwater essentially, and I'm betting for that to happen again. So that's kind of my outlook on silver. I don't think there's a lot of safety here, and the volatility is going to be really nasty, like it always is. If you're trying to preserve your capital and you're waiting for an opportunity in some other field, I don't think silver is it. I think silver is a great leverage on gold, and during those bull markets, it's always going to outperform gold. You know, but I don't see it being a safe play in this moment. I think there's potential for a lot of volatility. I think there's a lot of potential for downside. Um, and I think that, there, at the very least, there's a possibility that we relax a little bit and head back down towards this 618, 25, $26, as things kind of settle down after the election, or as they ramp up after the election, either one. But I can't help but get over this little fractal that it kind of seems like we're, matching from 2020. It just seems too similar. I don't know if you guys see it. Leave a comment if you do. But you can even take like a bars pattern copy of back here, and it's not going to match up perfectly, and this is going to look terrible because it's being stretched over a longer time frame. But you can kind of see how there's like there's symmetry here. You know what I mean? There's a fractal here. I'm definitely not saying that we're going down to $6, but you get what I mean. It just looks like we have the same setup as we had in 2019 and 2020. So I urge caution on silver. I love silver as a long-term asset. I think, it's something we can talk about in other videos, but I think, versus other assets, it's going to do really well. But anyhow, wrapping it up now. If you want to support me doing these videos, you can go to the link below, the website below, and check out what we have for sale. We have gold, silver, platinum, palladium. We have collectible coins, graded coins, paper money, gemstones, a little bit of jewelry, watches. So check those out. If you want to support these videos, you can use us as a supplier, and we can kind of build a relationship together. If not, this is obviously free, and I hope that it helps you out in some way. All right, take care, and I'll probably be making a video once a week here. Thanks.